more broadly, you're positive on stocks, right? For the distance of the year. You agree with Larry Fink? You're going to get this this melt up? There are a lot of non-believers who are going to become, excuse me, believers in the market?
Yeah,
rally?
I think you have to believe there's a lot of dry powder. There's tons, it sounds like, at BlackRock being accumulated, even like Josh, money's being parked in fixed income. People save, almost $1 trillion a year. None of it's gone into equities. Credit's had the best year. I think it's like the 4th best year in 30 years. So it's an incredible year in high yield. There's a catch-up trade there. And I think economic momentum is improving in the second half. And if that does, then,
So doesn't all the powder then that you just referenced offset whatever negatives come from a pull from healthcare and a rotation into these other more advantageous areas?
Yeah, so I think by 2019, it's an up 25% year. I think an S&P 3100 is kind of what the base case should be for people.
Base case, okay.
Yeah, but could we revisit 2,700 or 26? I think it's possible.
What's best case?
I think best case would be we get towards an 18 multiple because people realize we aren't late cycle, and so you could be 33, 34. But we think this looks like 09, and I think it's tracking like 09.
What do you think? That's a pretty bullish call.
I noticed he had surgery on his knee. I'm wondering if he's still on the painkillers. But
I just took my dose.
No, look.
Why not? Tell me why not.
I think an 18 multiple is kind of high, and I do think we are late cycle, and you still have the issue of German numbers again today, down again. So you've got manufacturing numbers down again.
But you said this earlier. Who cares? Why should I care?
No, I think there are things to buy.
Here.
I think there are things to buy. I do look at this dislocation with healthcare as an opportunity. I said that in my note this morning. There are places to go. This will not go anywhere. Bernie Sanders did this study when he was in Vermont in 2011, and what he needs to get this done is to raise taxes, double the tax rate on people making $250,000 over. You think the Democrats are going to do that?
But what if I tell you this? What if I say, though, that, the first quarter is generally weak, weaker than the remainder of the year? So hold on, let me finish. Yeah. Obviously, it looks to be coming in better than expected. Leisman's rapid updates the last 2 days and other...
We called that residual seasonality, and that was correct.
And then GDP bumps by the big houses over the last couple of days suggest the economy is better than people maybe thought. So what if earnings follow suit? What if we're not as late in the cycle as you think?
Self-fulfilling prophecy.
Well, look, we've reset the earnings expectations without resetting the markets. You've had major declines in earnings estimates for the first year. So you can't say that things are still moving along like they were and that all the fears in December were misplaced. They weren't that misplaced because growth did slow down, and it is slowing down. Now we'll see guidance going forward. So to me, it's like, water finds its own level.
I got you, but
and the market's a place it has to go.
Honeywell says, okay, I see you, I get you, but I'm raising my guidance. And United Union Pacific says I'm raising my guidance. The CEO was on the network earlier. Things are good.
Well, I think in the rails he said things are a little slow, but they were operating a little better. He just said there was a slowdown. I was listening to the interview, but things are better. So the operational efficiencies are also better. They're running it better, but they all see strength in the economy. Nobody's coming out and say they see the economy really weak. So United Rentals, we'll talk about it later. Great quarter.
Well, what was doomsday with a lot of black clouds rolling in.
That's right.
Seems to be more sunny than people expect.
Well, I also think they lowered expectations so substantially, right? And so it's almost like, were they playing games because if you miss, you are getting punished in this market right now. And so I do think that they lowered expectations probably too much. And now they're like, oh, well, maybe we got a little wiggle room. Maybe we'll let them know we are doing a little bit better than we expected. But the truth is the numbers and the fundamentals are there from the economy. We are still seeing growth in various sectors of the market. And it is, I don't want to say that the companies are doing well across all sectors, but ultimately there are individual companies within those that you can find opportunities in those subsectors and in those particular names.
All right, so Tom Lee, hold on. Tom Lee, you get the last, but please, brief word. You came all the way out here, so wrap it up for us. Then I got to go.
Well, I think everyone's making the right points. This is the year where we're going to find out if we're mid or late cycle. And if we're late cycle, then this is a good year and next year stinks. But if we're mid cycle, this year ends on a great note, and then it's a pause that
the old inning question. Well, I got to start asking that again. What inning are we?
What inning are we in?
Tom, thank you.